going to do various assets. I'm going to do the DAX now. The DAX is quite interesting because on your daily, in line with various other indexes, you've come right up. Now, the key resistance and really where you've got that price action selling power, if you like, comes around the areas you've highlighted. If you took an average of that area and you put it in line with your key moving averages, you would end up with a very ideal tip short zone. It comes in line with the new forming downtrend on the DAX, okay, and it comes in line with all those price action areas. So that would be very ideal as a new short zone. It's absolutely no surprise, and it is absolutely no wonder that all the hits on this previously have been rejected away. Okay, it's a contentious area. People are saying, you know what, perhaps I just want to pull my orders out at this point. So having all of that and mixing in your key moving averages, like I said, is always going to be very ideal. You can see that your pullback at the moment, be it very small, is coming down to some very early areas of previous price action slash support. And I wouldn't be surprised if that aids you in your continued rise. I think there is room across various indexes for a slightly higher rise before you see a further larger fall. And particularly, I think that comes about as you've got that change in sentiment. Like I said, the Middle East or things like that start to cool down. The US, the Fed Reserve is saying, you know, excluding things in China, they're saying they've got things under control more or less. And they're not so concerned with hiking rates because people don't have any money, which is obviously positive for the global economy as a whole. So that's why I think you'll creep up slightly further, notwithstanding as well the fact that you've got various areas of early support to contend with as well, which you can see I'm labeling now. So essentially what I mean by that is if you've had a fall and it's not forceful and the market sentiment is to the positive side, it happens very often that you get very early rejection because there isn't that selling power, there isn't that force of lots of people saying, you know what, I want to short this. Okay, until that changes, that's exactly what you'll see. Okay, so you sort of come over your moving averages this point, your earliest MAs of your 20 and 40, and sticking in line with your earliest 20, it does give you a good idea of how strong the market trend is. Normally, you'll get a strong market trend where there is early support and there is also market sentiment that is strong, pulling you to the upside. Both of those things have happened. And that's why you had such a steep rally in gold and various other assets. So I would say with the DAX, I think that may be the case. I wouldn't consider reshorting the DAX at this high at all. I would much prefer up here. It just gives you some breathing space. It allows you to get a far more valid key technical short zone. And by that point, you may find also that the market sentiment has changed. As it does, it's interchangeable. It's changing all the time. And it could come at, you know, essentially, instead of things being great, they start to get worse. As I said in my other index video yesterday on US indexes, okay, they go from good sentiment where people start to get long, they buy, okay, and then they go to bad sentiment where people don't buy, okay, and they short and they get worried. You know, it doesn't really matter what way it goes, but generally, if you're getting a rise in the value of indexes, for example, it's probable that that is coming from market sentiment and release of data economically that is supporting the bias for a long side up move. Now, the problem for a lot of people is they're never in the market at the right time for that. They start to buy after they find out that there's strong market sentiment and they sell after they find out there is weak market sentiment. And that is the paradox, really. I mean, the problem with that is there's a couple of things. Number one, it would be far too easy, and everyone would sit and do that if it was like that. And number two, you know, it's just not practical. The only time you can ever get short value is after the move up. Okay, so buying it makes no sense. It's exactly what you saw with gold. Again, the price comes up, you should be short because you're looking for a fall. You're not trying to catch the last part of the rise, you're looking for a fall. Now, the only exception to that is the instance like you've got with DAX, where you're coming to very early support, you've got strong market sentiment, therefore your bias is probably going to be long, albeit very light, because just like this pullback, okay, you don't have a lot of room. So if it does turn out the market goes further, you'll be okay if you've taken a light size, and you'll probably be able to hold it. So that's why we trade so small across all assets, because it gives you that space, it gives you that room to breathe. If your size is too large, if the market sentiment changes unexpectedly, it's going to cost you. Okay, so just be very careful on that. You're trading in line with market sentiment, but your risk is also in line with market sentiment. That is what makes trading work. A disproportionate risk to probability, it skews the variance structure. You could even think about it with rolling a dice. Okay, if you're suddenly betting $200 on it being a 4, that is not in line with reality. Okay, or if you're paid out that much. So you just have to be careful with that. If you're suddenly making a massive risk, it's going to skew your win and loss curve. So you have to be consistent, keep it in line with what is going on. So that is the German DAX. Don't forget to like, share, comment, and subscribe, and of course get my free training underneath. I'm going to move on to